Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Political turmoil in South Korea as the opposition submits an impeachment proposal after President Yoon is imposed and then lifted martial law. South Korean stocks lead declines in Asia. Authorities vow to provide unlimited liquidity to stabilise markets. Plus, French President Emmanuel Macron says his government can survive today's no-confidence vote, insisting he won't resign before his term ends. Martial law imposed in South Korea for 6 hours, the first time since 1987. Now, of course, removed. The impeachment proposal is in and the market reaction continues as we focus in. Briefly, we will do on the Kospi, which is under pressure and leading Asia lower. So South Korean equities continue to sell off, though the Korean won has seen a bit of a relief today, making up some, but not all, of the losses that came through yesterday on the back, of course, of that shock announcement. European futures currently flat. You have had 4 straight days of gains for European stocks, despite the challenges politically over in France. Talking of which, of course, you do have that vote of no confidence expected later today. We are on the ground in Paris for the latest. FTSE 100 futures currently pointed lower by 0.3%. S&P futures looking to add to the gains of yesterday, eking out a 55th record high for the year yesterday on the S&P, currently pointing high by 0.2%. Nasdaq 100 futures looking to add 77 points, up 0.4% when it comes to that tech-heavy index. Let's flip the board and look cross-asset. We focus in, as I mentioned, on Korean stocks, but also the won as well. So the Korean impact there, the Kospi currently down 1.4%. So the sell-off continues. Political uncertainty, the challenges as well of the economy of this country and what the political unrest means for investment and for domestic consumption, certainly in focus for investors. The Korean won then gaining 1.1% so far in the session, but again, not making up for all of the losses that come through in the last 24 hours for that currency. The 10-year stateside currently yielding you 4.22. We look ahead to Jay Powell's comments later today. We've been hearing from Mary Daly suggesting that she is still open, potentially, to the prospect of another cut later this month. Certainly sees a neutral rate of around 3%. Further cuts to come, she said, though she didn't commit herself to this month. Gold, 2,649 on the yellow metal. Bit of a safe haven bid given the political unrest that we are seeing, currently up 0.2%. Let's go over to South Korea right now, where the main opposition parties have submitted the impeachment proposals against President Yoon Suk-yeol. This comes just hours after Yoon ended a short-lived martial law that prompted troops to encircle Parliament before lawmakers voted to lift it. For more on this breaking story, let's bring in Bloomberg's Denny Thomas in Seoul. Denny, we have the proposal now in place around the impeachment. What is the latest?
So it's going to be a bit before we know what happens, which way it swings. Clearly, the opposition party has control over the parliament, but they still require at least 10, 12 parliamentarians, lawmakers, to vote in favor from the ruling party to make this work in their favor. So it's still not a given, but it's pretty highly likely that either Yoon goes by way of an impeachment, or there's enough pressure for him to kind of step aside and find a new leader. So that's where we are. It's been pretty chaotic 24 hours, and something nobody was prepared for, and the reaction has been pretty swift, and we saw it playing out over the last overnight.
So, Denny, if Yoon is forced out, what is next in terms of the likely leadership for South Korea?
Yeah.
What additional political uncertainty could we be looking at? And what are the economic challenges of this country right now?
Yeah, so if either way, if it's Yoon is out, then we will have a fresh election within 60 days. That's what it's the first thing that happens, and there are a list of candidates that could be in the lead to take a pole position in the next election. I think beyond that, what investors and market is particularly worried about is how long this uncertainty lasts. And Korea was having challenges with the slowing export growth and this political uncertainty adds to that concern about further slowdown. And Moody's Analytical came out with a report today, which kind of warns that if this is not resolved and further complications emerge, there is a risk to a kind of a negative credit outlook. So those are the risks. The sell-off you saw in the local currency yesterday was pretty severe. It kind of pulled back a bit because the central bank has stepped up and to provide unlimited kind of liquidity. So that's stabilized, but the stock reaction has been still pretty severe. So clearly there are investors concerned, not just about the short term, but also how long it drags on and how much toll it will take on the economy.
OK, Denny Thomas with the latest out of Seoul. We appreciate it, given a busy day for you and the team on the latest. We continue to monitor the developments, of course, on the ground. Let's get the market reaction now in light of these remarkable times in South Korea. Let's bring in right now Avril Hong, joining us out of Singapore with a lens, of course, on Korean assets. Avril, we are seeing stocks down, but the won is seeing a bit of relief.
Yeah, it's been quite a 24-hour odd ride for these Korean assets, Tom. I mean, you think about how when we first heard news of this shock imposition of martial law, the Korean won actually popped to 1444 against the greenback, weakest level since 2009. The stock market opened down 2% on both the Kospi and the smaller cap Kosdaq index. But I think financial authorities' reassurances of unlimited liquidity, as Denny was just alluding to, is really helping the Korean won. Stocks, as you say, are still down because there are risks in the market that has already, in the past couple of months, seen about $14 billion of outflows from stock market investors because of tech earnings disappointments. You think about how growth has been tepid. The BOK last week surprised with a rate cut in anticipation of Trump's tariffs and the growth concerns. So clearly there are risks, there are concerns. This political turmoil is just piling on to that. Flip the board again, because I wanted to highlight as well what we're seeing in the rest of the Asia Pacific. By the way, South Korea among the worst performers in the region this year in terms of the stock market. And it's worth highlighting that there was a fair bit of caution in the rest of Asia. Nikkei was down about 0.4% earlier on. You keep in mind how this is still a major economy. It's an important chink in the chain for the global supply picture. So there are these concerns that potentially, the rest of the region watching it very closely. You keep in mind as well, it's at a time where investors are already grappling with these US-China tensions. The offshore yuan just a day ago hit the weakest level in a year. So we're keeping a really close watch on this. And indeed, this is a point that our colleague Mary Nicola from the MLive team is making, that not just Korea, not just US-China tensions, but potentially even France as well, given the turmoil there, the global FX volatility, that's something that seems to be here to stay, Tom.
OK, Avril Hong weaving in that market reaction for us on these historic moments, of course, in South Korea as we continue to follow the politics and the market reaction. Avril, thank you very much indeed for the deep dive there and the linkages, of course, across the Asian region. From politics and uncertainty in South Korea and Asia to the political uncertainty closer to home in France now, because President Macron has called on French lawmakers to set aside their personal ambition and reject a vote that would topple the government. Far-right leader Marine Le Pen has vowed to support today's no-confidence motion called by a left-wing coalition. Together, the two groups have enough votes for the motion to pass.
I hope so, and it's indeed possible. It depends on the members of the National Assembly, each whom has a responsibility to the French people, to the voters of their constituency, and before France too, which is at a rather serious moment.
Let's bring in Bloomberg opening trade anchor Kriti Gupta on the ground for us in Paris. Macron saying that the government might survive. Barnier suggesting it's possible as well. Wishful thinking, Kriti?
certainly wishful thinking. The odds are stacked against them. But in the words of Michel Barnier, it's not impossible. Tom, it comes down to the way Parliament is actually broken down around this vote. Remember, the French Parliament is broken down into thirds at the moment. The NFP, the left coalition, you've got the right with Marine Le Pen and the National Rally and their coalition. And then, of course, Emmanuel Macron's party in the center. What's tricky here, though, is that there could be a little bit of a make or break case when it comes to the Socialist Party. That is, of course, the most centrist faction when it comes to the left side of Parliament. What's significant here is those are the people that both Michel Barnier and Emmanuel Macron have targeted in the last 24 hours, saying that these are the people who could vote for with their conscience or need to potentially make or break this vote. And that's where so much of the speculation lies, that if you do see enough socialists in Parliament abstain from the vote, there is a slim but not impossible chance that Michel Barnier could make it out with this vote with his job intact.
OK, well, that would be quite the outcome, wouldn't it? Slim but not impossible, as you say. Talk to us about the debt challenges of France and whether or not this is a broader challenge in terms of the prospects, the risks of a broader European debt crisis, Kriti.
Well, of course, the comparisons have been made, Tom, of this idea of French debt, the yield premium now surpassing that relative to German debt of Greece, of Spain as well. And that really brings back a lot of memories from back in 2011. And although some of the challenges are quite similar, a story of deficit, unsustainable and kind of growth and spending, the systemic risk is not quite the same. And that's perhaps where markets have gone a little too far. At least that's what the critics would argue around the story and around those comparisons that are being made. I spoke to traders here in Paris in the last couple of days and certainly in the last 24 hours who've made a very interesting comparison I think you'll appreciate. And that is comparing it more to likes of what we saw in Silicon Valley Bank and the fallout of that as opposed to the Eurozone debt crisis. Stick with me here. The idea here simply being that the response may actually be more in terms of the yield move you see in the debt as opposed to an actual shock to the system. And that's why it's taken the likes of the euro, for example, to react more strongly to what you're seeing in the French debt market.
OK, now that's a really interesting analogy to draw on. Euro-dollar currently at 105. Kriti Gupta on the ground for us in Paris. Bloomberg opening trade anchor. Excellent. Thank you very much indeed for the update. Later on the show, 6:30 a.m. UK time, we're going to be putting some of these questions around the politics of France in an exclusive interview with the CFO of the French defence and aerospace giant Thales. So we'll be talking about the politics of France. We'll be talking, of course, about Ukraine, about Europe's defence opportunities and challenges, plus, of course, geopolitical tension. So stay tuned for that conversation. 6:30 a.m. UK time, coming up in about 15 minutes' time. Coming up as well throughout the day, a couple of markers for your diary. 8:50 a.m., 8:50, 10 to 9 a.m. UK-France PMI, so a touch on, that's UK time. We're going to get France PMI, so a touch on the health of that French economy, given the political challenges there, so that's going to be interesting. 10 to 9 UK time. 9 a.m. UK time, the OECD Economic Outlook report will drop, and at 7 p.m, the Fed Beige Book. Jay Powell speaking later today as well. So some details, some colour on the health of the US economy from the Beige Book. That's at 7 a.m. UK time. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. And, of course, the focus is on le vote, as they put it, in Daybreak in France, but also, of course, what is transpiring in South Korea. Coming up, as governments grapple with funding constraints, our next guest says AI can be a big part of the solution. That conversation, the report and the data is next. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Who do you think holds the leverage right now? Employers or employees?
It's more balanced than we've ever seen.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The labour market weakness we saw in the summer was a head fake.
What raises this question, basically, has the narrative been set?
We are still in the throes of a strong labour market.
The November Jobs Report, Friday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Happy Wednesday. Now, with governments around the world facing mounting financial pressures, And we're getting reminders of that politically, of course, this week as well. My next guest says artificial intelligence can offer agile and efficient solutions. I'm joined now by Shmuel Chafets, co-founder and general partner of Target Global, a European technology investment firm. Amongst your portfolio, Kazoo, Copper, Delivery Hero, Revolut, many others. Thanks for coming in. This is a piece of the AI story that we haven't told yet in detail, and that's why I thought it was interesting to get you on to talk about this report. What were the key, Shmuel, what were the key findings? You have not been someone who's got and walked blindly into the AI optimism tunnel. You've raised question marks, you've raised critiques, you're not dismissing it by any means, but you have put a critical lens on AI. Now you've done this report, the focus on what AI could mean for policing, for nurses, for teachers. What came out of this report?
So good morning. No, we haven't walked blindly into AI. I think it's obviously an incredible revolution, but it's so easy to overestimate the short-term innovation and underestimate the long-term innovation. And it's also very easy, and you see it across the UK and Europe, you see governments focusing more on the risks than on the rewards. They're focusing a lot on how to protect people from AI, on how to make sure it's safe, which is extremely important. But I think we're missing a little bit the tech dividend that we all can get. So we chose to focus on frontline workers, on the people really in the edge of the system. And I think what really came out of it is that there's an incredible short-term opportunity, not necessarily in the mission-critical things. It's not necessarily that we're advocating giving decision-making in healthcare or in policing to AI. I think there's more of a debate that's needed before you do that. Mm-hmm. But the small day-to-day tasks that take up a lot of the time of these frontline workers can be automated, and it can make their jobs easier, it can make their jobs better, and it can really get them returning to their core.
Are there some obvious examples that were flagged to you through this report that stand out in terms of real, concrete efficiencies and benefits that could come through if some of this technology is implemented?
So I think what stood out to me is that we've spent the last 20 years obsessed about data collection, data entry, and about software. We've brought a lot of layers of software into the governmental workforce, and in the end, software is bureaucracy. And we've taken the jobs of a lot of these frontline workers that used to be facing a human, and we put them in front of a computer for a big part of their day. And that's made their job harder, it's made their job less interesting, and it's piled on to their workload. And you could take that entire piece of their job and just automate it. And you will solve not only for the shortfall in people, and we saw police forces doing it, we saw hospitals do it in small scale around the country, but you can also solve for the churn in those jobs.
When I think of government and technology, I think of a pretty checkered history when it comes to procurement and implementation. What are the barriers to getting this in place, getting it in now, and creating real efficiencies at a reasonable cost to the taxpayer?
I think the barrier is the government trying to do it top-down, trying to create a ministry of AI and sort of trying to push this technology revolution downwards. What we advocate is something very similar to what happened in corporations with SaaS. So giving the decision-making to the people at the edge. Government should create guardrails. So how is it safe? How is data protected? Should educate. Because I think one of the things that we saw, and it was particular, I think, with teachers, people don't know enough. So it should educate and then let people at the edge make decisions. Generative AI is extremely customizable. That's the beauty of it is you don't need to be a programmer to build programs. And if you push that information and you push the infrastructure to the edge, people will do better than if it happens centralized from the top.
What are the opportunities for investors?
So we didn't necessarily look at this from the investor point of view. I think we do see the same things that happen here are the things that happen in corporate settings. And we've had some of our companies do extraordinary things by automating these types of processes. I mean, one of them, Travel Perk, for instance, is a travel company, took its entire back end and just revolutionized the company. And we think that same opportunity exists in public sector. And I don't think it's necessarily by building public sector-focused companies. It's by taking the same companies that work in the private sector and bring them to the public sector, but top-down, but bottoms-up.
You've been talking to the British government about this report. What is your level of confidence, Schmuel, just between us, as to whether or not this government will actually act in a meaningful way on this opportunity?
I mean, I think there's definitely a willingness to act. But this requires a real change in the way that government looks at technology adoption. And it requires a real step change. And, you know, we are talking to the government here, we're talking to governments in other places we're active, and trying to help them make that change.
OK, Schmuel, thank you very much indeed. An important report being put together by you and the team at Target Global on what the adoption of AI could mean for frontline public sector workers, police, nurses and teachers, and the opportunity and challenges there. Schmuel, thanks for coming to the studio to talk about it. Schmuel Chafets, co-founder and general partner of Target Global, the venture capital firm. Some redheads crossing the screen right now around the supermarkets conglomerate that is 7 & I. It's weighing an IPO of its US assets as part of a management buyout. This is a company, there's a holding company, of course, which oversees a number of different convenience stores, supermarkets and department stores. 7 & I shares are raising their losses. They are gaining on the back of this news as the company and the holding company is apparently looking at IPOing some of their US assets. We'll keep across that story for you if there is more detail. Coming up, Georgia's Constitutional Court has rejected a challenge to the results of October's parliamentary elections. We bring you that story next. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Who do you think holds the leverage right now? Employers or employees?
It's more balanced than we've ever seen.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The labour market weakness we saw in the summer was a head fake.
What raises this question, basically has the narrative been set?
We are still in the throes of a strong labour market.
The November Jobs Report, Friday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, Georgia's Constitutional Court has rejected a challenge to the results of October's parliamentary elections filed by the country's president. This after violent clashes in the capital were sparked by the ruling party's decision to delay EU membership talks until 2028. President Zurabishvili spoke to us about the court's decision.
That's a blow. It's a blow to the political process, a political way out that would have been very, in a way, easy and would have brought back the whole situation in a constitutional framework, recognizing that the elections had been rigged on 2 major constitutional points, which was the secrecy of the vote. The situation is not linked to first of all, I don't have to resign. I have a mandate which goes until a new president is inaugurated. Their president is going to be inaugurated by the end of the month. It's not an election that is recognized by the population. So I will continue to represent the voice of the people that want their vote back.
And that was the president of Georgia speaking to Bloomberg's Francine Lacqua. Let's check back in on Korean assets right now, where the won has gained, but after a very significant drop yesterday. So the currency pairing some of the heavier losses. Korean stocks, though, as they edge closer to the close for the day, about 5-10 minutes away from that, remain under pressure. Korean stocks down 1.3%. The impeachment proposal has been submitted by opposition parties. You can see live pictures right now from the main plenary hall of the South Korean Parliament after the President Yoon, of course, came out with that bombshell announcement that martial law was being imposed. That only lasted 6 hours. Now the President faces impeachment. The country faces political uncertainty. Coming up, we will have an exclusive conversation with the CFO of Thales on France's political turmoil. That's coming up. This is Bloomberg. Good Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Political turmoil in South Korea as the opposition submits a proposal to impeach President Yoon after he imposed and then lifted martial law. South Korean stocks lead declines in Asia. Authorities vow to provide unlimited liquidity to stabilise markets. Plus, French President Emmanuel Macron says his government can survive today's no-confidence vote, insisting he won't resign before his term ends in 2027. European markets futures are pointing lower after 4 straight days of gains, and France may be part of the story there. European futures then pointing to losses of 0.1%, so we could be snapping 4 days of gains for European markets. The S&P 500, by the way, notched its 55th record of the year, and S&P futures pointing to further gains today, up 0.1%. FTSE 100 futures here in the UK pointing lower by 0.3%. Nasdaq 100 futures pointed to gains of 0.3. Let's flip the board and look cross-asset. The focus, of course, on the selling pressure across Korean assets. Equities at least reflecting that. Currently, the Kospi down 1.4% as they head to the close over in South Korea, dragging Asia lower on the political uncertainty and a reminder of the economic challenges of that country as well, potentially facing tariffs from the incoming Trump administration. The Korean won is currently a little stronger versus the dollar, up 1.2%, so it's reversing some of the earlier losses of yesterday, but not by the entirety of the margins. Currently, you're looking at dollar down versus the Korean won by 1.2%. The US 10-year yielding you 4.23. We look ahead to Jay Powell's comments later today, the Beige Book, and a data load as well from the US in terms of services and factory orders and durable goods orders as well, all crossing later today. Gold is also getting a bit of a gain on the back of maybe some of this political uncertainty globally, currently up 0.2%, the yellow metal. Now, German Foreign Minister Annalena Baerbock says NATO membership for Ukraine could be part of a peace deal with Russia. Baerbock also suggested an agreement could also include conceding some occupied Ukrainian territory. Her remarks came ahead of a meeting of NATO foreign ministers. NATO chief Mark Rutte says the focus will be on speeding military aid to Kyiv rather than discussing a possible peace process. I'm joined now by someone who has deep expertise, of course, and a crucial touch point on Europe's defence sector, Pascal Bouchiat, CFO of French defence and aerospace firm Thales. Pascal, thank you so much for joining us this morning. Let's start with the war on our doorstep, which is Ukraine. Is Thales, is the sector ramping up supplies to Ukraine?
Good morning. Ukraine for Thales represents quite a small exposure. Ukraine represents less than 1% of Thales revenues, which means that in case of a ceasefire in Ukraine, overall Thales will not be affected. No, you mentioned about defense, and it's true that we keep seeing defense spendings growing across the board in many countries. And it is one of the markets where Thales enjoy quite a strong demand, together with cyber and digital, and together with aerospace. So overall, what we see today in front of us is more like a decade of growth, and this a bit regardless of how the situation in Ukraine will evolve in the next coming months.
Pascal, what level of defence spending are you modelling internally at Thales? Your expectations, your forecasts as we look into 2025?
Oh, we have seen, most countries across the board growing their defence spendings, and most of them today meeting the requirements of NATO, i.e. a level of defense spending that represents approximately 2% of their GDP. And we believe that from this level, we will see countries, NATO countries, keeping rising their overall defense spendings. What we model in our own projection for 2025 is something like 5.5% of growth in defense spendings in the countries where we operate. So, I mean, quite a good level of growth. But once again, what is more important to us is not just the 2025 level of growth. It's considering that, considering the overall geopolitical tensions, and Ukraine is not the only case, we believe that in front of us, we will have something like a decade of growing demands in terms of defense.
Okay, a decade of growing demand in terms of defence. Do you and the team expect that the incoming Trump administration will be a catalyst for additional spending on defence by NATO members, other NATO members, and by members of the European Union?
I think it's likely to be the case. Mr. Trump has been quite clear, asking European countries or NATO countries to take their fair share of spendings in terms of defense. And it's true that we see the US spending overall much more in terms of proportions of their GDP, in terms of defense spendings. And I think it's fair that NATO countries, in particular European countries, continue to rise their defense spending. This is what they forecast, and this is what we'll take advantage of in the next 5 years. Overall for Thales, as we serve most of the NATO countries from our industrial base in many countries. This is the case in France, of course, but this is also the case in Germany, in the Netherlands, in Italy, in UK, so in many countries where we have a pretty strong industrial base. So which means that overall, I think that we should benefit from, this level of requirements.
Yeah.
With all European countries investing more on defense.
Is the political uncertainty in France leading you to delay any investments?
No, I think that I can understand, a bit of concern following, this overall political turmoil in France. No, we need to take a broader perspective. As I mentioned earlier, we have in front of us a 10 years growth in most of our businesses, in particular defense, but the same in our aerospace business. You have in mind probably, the level of backlog to our key customers, in particular Airbus. So we'll take advantage of all of that, which means for us, it's not a question of delaying investments. It's a question more to invest in order for us to accelerate in terms of delivery, to meet this level of demand that has probably never been so high in most of the markets that we are in.
Do you have a message for lawmakers meeting today who may topple this French government?
No specific message. I don't want to comment. But once again, I think that we need to distinguish between the very short terms, and this might be the situation today with this potential no confidence vote, from what we see on the longer terms, and Thales being active on fast-growing markets, and this is what we think is much more important than the very short terms that you mentioned.
I need to talk about the investigation into bribery, alleged bribery, allegations from the French and UK sides as well. So under investigation, the company, as a result of these claims, suspected bribery and corruption. How long have you known about this investigation, Pascal?
No, let me come back on this point. First, we confirm the initiation of investigations in relation to the performance of a country in a specific, related to the execution of a project in a specific country in Asia. We deny the allegations brought to us. We fully cooperate with both the SFO in UK and the PNF in France, and just would like to confirm that we comply with all national and international regulations. Now, to answer more precisely your questions, at this point, it's of course quite difficult for me to make any additional comments and to consider how long those investigations will last. At this point, it's really too early to be more vocal on this matter.
OK. I want to talk about some collaboration that you have with Airbus. Leonardo reports that you're setting up a joint venture. You're looking to set up a joint venture to compete, potentially, with Elon Musk's Starlink. How far along is that plan? What is the ambition?
Let me come back on the situation of space. And it's true that, the space sector has been overall disrupted by the emergence of SpaceX and then Starlink. And it's true that many of our clients, satellite operators, have been facing some kind of disruptions, which means that for us, the top priority is really to restore margin, i.e., putting in place the necessary adaptations plan in order for us to reduce cost and to increase the overall competitiveness. Now, you mentioned, potential collaborations with Airbus in particular. At this point, let me just say that we are having high-level exploratory discussions, and we'll see whether or not it makes sense, to consider further collaborations with Airbus and Leonardo. But once again, our top priority for us is really to restore, our profitability on our own, and this is what we have announced with quite an ambitious cost adaptations plan that will allow us to recover on our own in terms of profitability. And then, of course, we'll consider, because we are pragmatic, we'll consider whether or not more collaborations with Airbus and Leonardo make sense for this overall sector.
Atos, which is a key, of course, provider of IT and cybersecurity in France, facing its own challenges. There are reports that maybe you're looking at some of their assets. Are you interested in any of the assets at Atos at this point, Pascal?
No, I would like to say that overall we made it clear that we are not interested in buying Atos. We are not interested in one of their key divisions, which is BDS. Now, if one day some assets are for sale, in particular relating to defense, that of course a topic we will look at, but it's not a priority overall at Thales, overall in terms of M&A.
Okay, Pascal Bouchiat, CFO of Thales, on that focus of returning to profitability, particularly in the space unit, and maybe some further collaboration there. We appreciate your time this morning. Getting back to the Korea story right now, and the moves, of course. The market is closed now in South Korea. Equities closing lower. So the Kospi closing down a little over 1.4%. The Korean won has seen some paring of the losses of yesterday, but Korean stocks under pressure, falling in the session by 1.4%. The proposal to impeach the president after he enacted martial law, that proposal is now in and is working its way through the parliamentary infrastructure of Korea. But political risk heightened, of course, in that country. A story we continue to follow for you. Coming up, staying with the story out of France as well. We'll get more details on the French economic ramifications of the political disruption there. We're going to be talking to Janet Henry, HSBC's global chief economist. We'll also get a view on the Fed and the UK. Stay with us. This is Bloomberg. Welcome back. President Macron over in France has called on the French lawmakers to set aside their personal ambition and reject a vote that would topple the government. Let's get more from Bloomberg opening trade anchor Kriti Gupta on the ground for us in Paris. Kriti, where do things stand?
Well, Tom, today is going to be a make-or-break day for Michel Barnier. This idea that he really has to get enough votes to kind of surpass no confidence. Things are not looking likely to be in his favor. However, he and Emmanuel Macron last 24 hours remain slightly optimistic, cautiously optimistic, as you will. But Tom, I think what a lot of people are asking is what happens next if this confidence vote does actually go through. And that's where things get interesting. Remember, a budget is still very much in the balance when it comes to French politics and certainly how they're going to govern in 2025. If this no confidence vote does indeed pass, it goes back to Emmanuel Macron. He has two choices. He can install a caretaker government with Michel Barnier at the helm of it, or he can pick a different cabinet, go from the starting board. What that does, though, for the economy, for the budget, is put France in a little bit of a state of limbo. And that's where a crucial piece of legislation dating back to 2001 comes in handy, the Loi Spéciale. In other words, the special law, which basically carries over the budget from 2024 into the first month of 2025. The problem with that, though, Tom, is that it includes things like restrictions and excess spending that may have come up in 2024 that you may need in 2025, a little bit more austerity than perhaps expected. That means cuts to things like defense spending or expected defense spending in 2025, which we know has been a major priority, not just for Emmanuel Macron, but in broader Europe as well. But, Tom, it looks like that's where things are headed, and things like tax cuts, tax hikes, pension reform, electricity taxes, drug reimbursements, all of those still very much hanging in the balance. All of that direction coming down to Emmanuel Macron's desk by the end of the week.
OK, Bloomberg opening trades anchor Kriti Gupta on the ground for us in Paris, outside Parliament, monitoring all of this for us. Yes, France very much in a state of limbo. And we're going to be talking, by the way, to Fabrice Le Sachet, the MEDEF Vice President, 8:15 UK time. And on the pulse, just after 9 a.m, we're going to speak to Socialist Party Member of Parliament, Arthur Delaporte. I'm joined now by Janet Henry, Global Chief Economist at HSBC. Let's bring in the expertise in terms of how we think about the European economy, on the politics, but also, of course, in terms of the ECB's reaction function. Janet, in terms of how you and the team are modelling the impact on France's economy, if this government falls, if we get this special law in place, Kriti Gupta explaining to us that maybe that would mean less spending than potentially some had expected. How does that adjust and impact your forecast as you look into 2025 for the French economy?
Well, we've got to remember that Europe has a very strict set of fiscal rules. And France is a country that's already in the excessive deficit procedure. So actually, the budget for the coming year was meant to entail a degree of austerity. They were meant to be narrowing the budget deficit. And while there may be some limits on spending if they just freeze the budget, and certainly that opening report made out just how complex this situation is, but also some of their tax measures. So it could be that if the budget is frozen for next year, you actually get less fiscal tightening than France would be required to do under the excessive deficit procedure kind of rules. So in terms of what that means for the outlook, it means uncertainty, more uncertainty. And when we think about what drives investment spending, it is certainty about the future, about expected future demand. It's not just about what happens to interest rates. So actually, certain parts of consumer spending may hold up because inflation's come down and the labour markets across Europe are still reasonably firm, even if they're slowing down a little bit. But companies in particular do not like uncertainty, and they're particularly reluctant to invest against a backdrop of political uncertainty.
Yeah, so political uncertainty in France, in Germany as well. Does that tie in to the ECB reaction function? Markets now seeing rates below 2% by April.
They are, and this is what's interesting. I guess, since the US election, obviously we've had the market scaling back expectations for rate cuts in the US and increasing expectations for rate cuts across Europe, just because of weaker growth. But we've got to remember, weaker growth doesn't necessarily mean that inflation follows very, very sharply. In the past, if we go back, for instance, to the decade before the global financial crisis, Germany was the weak link then. It had very, very weak growth. It was a disinflationary force on the rest of the Eurozone. Germany may have very weak growth at the moment, and the prospects certainly are not bright in the near term, but Germany's actually got higher inflation than elsewhere. So actually, yes, weaker growth. If it brings lower inflation, then the ECB will have to cut more aggressively. But relative to market expectations, actually, we think that probably they will stop short of 2%. We do not see them going below that. Inflation, I think, will take longer to come down. Productivity growth has been negative. We're getting excited. It's got to zero. It's certainly not positive. So actually, it's that longer adjustment for inflation. We see it eventually going towards target, but not quickly enough to get rates with a one handle on them.
That's very interesting. Not below 2% then next year for the ECB. Briefly on the Fed, we had jobs data, of course, on Friday. We've got some additional data around services and manufacturing out today. Janet, do they go with the cut in December or later this month, I should say, from the Fed? And if so, is this potentially a Fed that's on hold in the first part of next year?
I think that the Fed has made its policy setting and how it's approaching policy setting very, very clear. They still think that policy is restrictive. They still think they want to remove restriction, but they are still data dependent. Everyone's speculating about what may happen next year as a consequence of numerous policies that might or might not happen, and we can't be sure of the sequencing. What they do in December will depend on the data. We think they'll cut in December. But clearly the prospects are growing that at some point they take a pause or slow down the pace of easing. But we do see ongoing rate cuts next year, even if they end up taking a pause in January. But for now, we're still expecting that December rate cut, given what we're expecting on core PCE and the labour market data over the course of the next week.
Always excellent. Janet Henry, Global Chief Economist at HSBC, on the prospects of a Fed cut later this month. And the ECB may be not seeing rates below 2% next year, as some of the markets expect. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. South Korean assets, of course, in focus, given that bombshell announcement yesterday around martial law being imposed. It was then removed 6 hours later. Here's how it reflected in futures around the Kospi, which, by the way, closed lower on the session today by around 1.4%. You had martial law declared for the first time since 1987. Then you had that pledge of liquidity injection from the Bank of Korea, and then lawmakers voted to remove martial law. It was lifted 6 hours later, and the president then later confirmed that he would be lifting martial law. Now we have the proposals in place in Parliament, working their way through Parliament in South Korea, in Seoul, around the impeachment of President Yoon. It is also a reminder of the economic challenges of this country, given what is happening on the trade front, the potential hit to tariffs, and what this political uncertainty could mean. Bloomberg Economics saying it is likely to be another hit to domestic confidence that could further sap the energy of this key Asian economy. Let's flip the board and have a look at the political uncertainty in France. And just a reminder of the underperformance of the CAC 40 versus the Stocks 600 and other major indexes in Europe. Down in 6 months since, of course, President Macron called that election and that parliamentary election. Down 8%, around 8% the CAC 40 versus flat for the SXP, the European Stocks 600 benchmark. The opening trade is up next. Stay with us. This is Bloomberg.